This is Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. The top stories this hour. A week lead-in for Asia as Wall Street starts the month in risk-off mode amid a sell-off in digital currencies. Nearly $1 billion of leveraged crypto positions getting liquidated. Treasury sliding too on a surge in corporate debt sales, and with BOJ Governor Ueda hinting a December rate hike may be on the cards. Plus, Nvidia investing $2 billion in chip design software maker Synopsys in the latest big deal in the AI space.
Yeah, we'll be watching those tech stocks in the trading session across Asia today. Also, our eyes firmly on the Japanese market, which is pointing to potentially more losses in today's session. Remember, we were hit in the previous session by BOJ Governor Ueda's more hawkish comments signaling that a rate hike could come as early as December. So we continue to see the two-year yield surging to that 2008 high. The Japanese yen also surged, so its best say in 6 weeks, although in the overnight New York session, it did give up most of those gains. We're still sitting at that 155 level against the U.S. dollar. The Korean won, though, remains supported throughout the session after authorities actually talked about potential intervention and stabilizing the currency. We're getting the November consumer prices rising 2.4% year on year, beating economists' estimates of 2.3%. So more upside surprises for inflation. Even when it comes to the month-on-month number, prices falling by less than expected, 0.2%. So all of this, of course, has to do with what the BOK will do next. The CPI, excluding fresh food, excluding energy, so that would be core CPI coming in at 2% growth year on year. We have seen a weaker won in South Korea. We have also seen a rollback of those fuel tax cuts. So we are seeing those prices supported. And of course, the significance for the Bank of Korea will be key as the central bank also deals, of course, with financial stability issues, Avril.
Yeah, take a look at U.S. assets. You talked about the BOJ governor prompting this rout in JGBs. That also rippled through global debt, the treasuries. We actually saw the entire curve shifting higher, and we also saw investors shunning risk. This is, don't forget, typically a month that we're starting off where it's historically been good for Wall Street, but not the case this December. We saw stocks getting hit. Worth noting, though, that we are coming off a stretch of monthly gains that's the longest since 2021. Overnight, small caps also getting hit. And on the point on investors shunning risk, cryptos also got whacked overnight. You're looking at Bitcoin about to hit this resistance of the 20-day moving average, 80K, the next level to watch. And we've been talking about this, right? $1 billion liquidated in terms of leverage position. So the question is, how much further spillover effect might we potentially see? Let's get more on the market outlook with Bloomberg and my strategist, Mark Cranfield. Mark, good to see you. So talk us through what we're seeing in markets cross assets. I mean, we're seeing cryptos not catching a break. What is your sense of the extent of further spillover, and can we see a Santa rally?
I think we can probably stop talking about cryptos already. I think that's over and done with. I don't think the impact is going to last too much longer. It was really exaggerated yesterday in Asia because the sell-off happened early in the day before traders really had a chance to gauge what was going on. And it happened to coincide with a relatively hawkish appearance by BOJ Governor Ueda. So suddenly everybody became very risk averse, and one thing led to another, and we've got crypto markets leading the other. You could tell pretty well in the afternoon in Wall Street trading, equities were ignoring crypto pretty fast. So we had a decent rebound. US markets ended they ended in the red, but well above the lows of the day. We actually saw the worst point during the Asian trading session. So not during the New York, the session that really matters is what happens during the cash market in America, not what happens in Asia. And crypto's already bouncing slightly from their lows as well. But if you think where the peak in cryptos was in September, since then, S&P 500 has made several record highs. So really the long-term impact of cryptocurrencies on equities, especially in the US, is really quite limited. So I suspect that was an interesting theme for yesterday. I doubt we'll be discussing it again today.
Mark, you mentioned the Bank of Japan Governor Ueda's comments really setting off that risk-off across Asia. And of course, we saw the global bond sell-off as well, triggered with the JGB slumping. Treasuries, though, have a whole different picture to contend with, corporate bond sales as well.
Yes, and the fact that the Federal Reserve is now fully expected to lower interest rates in December, and with whoever the new FOMC chairman is, likely to lower again next year, at a time when people are not sure that inflation has really come down into a low enough range. So that leads to curve steepening, and that affects the corporate bond market as well. And interestingly, even in Japan, the long-end yields were rising as well, as Ueda was speaking yesterday. So it's almost a perfect storm for the bond market. And today, we have a 10-year JGB auction, which has now become a global event. It is no longer just about whether a good auction satisfies Japanese investors. It will be watched around the world. It's almost like a script from a horror movie. The timing could not be worse for a 10-year Japanese bond auction, with yields climbing to multi-year highs and not too far away from the 2% threshold as well. So the story that is likely to have traction today really is the fixed income and debt market story. That one can go on for quite a while, particularly as the Bank of Japan meeting is still a couple of weeks away. We'll be talking about bond volatility for a little while yet, I suggest.
Mark, great to get your guidance. Bloomberg MLive strategist Mark Crownfield there. We're also going to be watching the tech sector in Asian trading. Shares of chip design software maker Synopsys jumped, with Nvidia investing $2 billion as part of a broader engineering and design tie-up. CEO Jensen Huang says the move will help infuse Nvidia's AI computing technology into more industries.
This is one of the largest compute-intensive industries in the world, has not been serviced, not been addressed by accelerated computing until now. And we're accelerating that process with our deep partnership. Together, we will address nearly every industry.
For more, let's bring in the Asia Tech correspondent Annabelle Drewlers. And Belle, we have been talking about how this is a Jensen Huang world. He seems to be everywhere these days.
Yeah, that's right. I mean, just really proving your point there, Shery, I think, on that front. But yeah, this is a pretty significant deal in terms of it being dubbed an engineering deal. So we've seen these in the past with OpenAI, with Nvidia rather, but with recent Nokia investment, for instance, we had that investment into Intel as well. So it's sort of coming out of the same playbook, not exactly a circular deal, and we can get to that on a moment. But yes, in terms of the financials, I mean, you're talking here about 2.6% of outstanding stock for Synopsys, with Nvidia paying around $415 a share, and you did see the company rising throughout the session. To give some context here on what Synopsys does as well, because I think that's important, but it is a company that produces the software that's used to design and validate chips. So it takes chip IP from a company like ARM, for instance, then it provides the software to actually design and then manufacture, as well validate those chips. So before they go into the foundry, like TSMC, for instance, you can test that they're actually working with Synopsys software as well. So what this new partnership means is that Synopsys is going to be integrating Nvidia infrastructure across its range of different software architecture. And they're also, the company said, you heard them speaking, but the company's speaking about developing AI agents, and they're also going to be conducting joint marketing as well. So Nvidia, from their perspective, and Jensen Huang spoke about this on Monday, this is not a deal that has any specific purchase agreements tied to it, and that's why it's not being deemed as circular. But Jensen Huang did speak about what he hopes to achieve in this, and that's to speed up the adoption of AI across a range of different industries.
Right, not exclusive and therefore not circular in nature. But when it comes to AI models, of course, we're keeping track of what DeepSeek is doing as well. It has a model upgrade. Tell us more about that.
Yeah, so it's essentially updates to a model that was released back in September. So the model was called DeepSeek V3 V3.2 EXP or experimental, essentially. This latest version is simply called DeepSeek V3.2. So the company says the performance is strong of this model, comparable, for instance, the latest one from OpenAI, that's ChatGPT 5, on a range of different performance benchmarks. It also says some agentic capabilities are built into the system as well, so it has that capability to have some human-like reasoning, but also to do things like search engines or use search engines, calculators, code executors as well. So that's one version. The second version is called V3.2 Special, and this one focuses on mathematical computations, other long thinking capabilities, and the company says that the goal here is really to push out the inference capabilities of open source models and also to really get better performance. Essentially, on this one, the V3.2 Special, DeepSeek is saying that it matches the performance of the latest Gemini 3 Pro version as well. So, I mean, two updates from this company. This is clearly a company that is very much in the spotlight for the way that it's able to build models with far less resources than what you see from the major US companies. And again, so far their performance, they're saying it is on that international standard.
Yeah, open source remaining competitive. Belle, thank you so much. Our Bloomberg Asia Tech correspondent Anne Boldroll is for us. Coming up on the Asia trade, hear why ANZ is cautious on yen strength even after BOJ Governor Ueda's hints at a possible rate hike this month. And the CEO of travel payment platform YouTrip joins us as they expand into Australia. Much more ahead. This is Bloomberg.
Authorities in Hong Kong say last week's deadly apartment block fire was accelerated by construction workers using cheap substandard netting and evading government testing. Let's go to Hong Kong and our China correspondent Mingmin Lo. Mingmin, we had heard earlier that testing has shown the netting met compliance standards. So how did the contractors allegedly evade these government inspections?
Yes, the authorities held another press conference yesterday at 5 p.m. in the evening, and they have found that out of the 20 or so samples of the netting, 7 of them did not meet the standards, and they have found that the contractors had wrapped the base of the buildings with compliant materials, but the higher floors, the harder to reach areas, were wrapped with non-compliant materials, which cost about half the price of the compliant netting. And this was clearly a move by the contractor to cut costs. And just to give you a sense of scale, the contractors had bought 2,300 rolls of the non-compliant nettings and only 115 rolls of the compliant ones. So the authorities have now increased the number of arrests. There are now 10 more people linked to this case and are accused of manslaughter, including some consultants, including some middlemen as well. Some of them are out on bail and some are still under custody at the moment, and it could take 3 to 4 weeks for the investigation to conclude.
Min, in the meantime, the death toll has also climbed. Is the search effort complete? Might there be still more victims?
Yes, so the death toll is now above 150 at the moment, and as of yesterday evening, the authorities said that they had completed the search of 5 out of the 7 buildings, so they are still continuing with the search of 2 more buildings. The death toll could potentially still be revised, and so far they have found bodies in the corridors, in the apartments, on the rooftop as well, and there are still about 40 cases of missing people unaccounted for. The authorities said that it is possible that they may never be able to locate some of those bodies because they said that some of the bodies had been burnt to ash. And of the 150 or so deaths so far, over 100 of them have been identified. The remaining ones are still of unconfirmed identities. And so, of course, this is going to be something that will be extremely difficult for some of the family members who are looking for closure from this case.
It is absolutely tragic. Min, thank you. Our Bloomberg China correspondent Min Lo with the latest from Hong Kong. Now, the EU's chief diplomat is warning that President Trump's efforts to push Ukraine into a peace plan could end up fueling Russian warmongering. This comes as U.S. Special Envoy Steve Witkoff travels to Moscow for peace talks. Let's bring in Bloomberg's Michael Heath. Mike, what is Witkoff looking to achieve, and might this, as the EU's top diplomat suggests, backfire?
Yes, Avril. I mean, this is the great worry that basically you had this 28-point plan that the US put forward, which was which mirrored in many respects what Russia has been demanding. Keeping Ukraine out of NATO, capping the size of Ukraine's armed forces, and Ukraine giving over to Russia some territory that Russian forces haven't even got yet. That's since been whittled back and brought, either parts of that have been removed or compromises have been found after talks with Ukraine. Now, Steve Witkoff is going to Moscow, presumably with that plan, to try and get Russia to sign on to it. Now, in a sense, Russia holds all the cards here because the US is the way that things have been moving is the US is almost sort of rewarding the aggressor here. And Europe and the chief diplomat there are basically saying that you reward the aggressor, it only encourages them, and this simply can't go forward. Europe's not in a bad position to actually create a bit of trouble there if Russia does agree with Witkoff on his plan, and Europe doesn't like it. It's doing most of the financing of Ukraine. It obviously has to deal with Russia in any post-war situation. And it also holds $300 billion of Russian reserves. So, it does have a place in this negotiation.
Mike, we heard from President Zelensky as well, and it seems at least there's some progress on some points. Take a listen.
And on the topic of security guarantees, we have concrete details from the U.S., concrete details from Europe. I'd say these are the three main topics, tracks, but also triggers. We need to be very careful here. I thank our negotiation teams. The plan looks better.
Still, territorial concessions will be difficult.
That's exactly right, yeah. I mean, it's just this question of Ukraine having to withdraw from its own territory to hand it over to Russia after almost 4 years of war, defending that area. And a lot of it's heavily fortified. It's quite important for Ukraine's future security that it holds on to that. And as you mentioned, Zelensky said that is the critical issue and the one that's the most difficult to solve. So that's what Steve Witkoff will be looking to find, some sort of compromise with Russia on. And they'll basically be looking for some sort of concession from Moscow. Now, whether President Putin's prepared to deliver that, well, we'll just have to wait and see what comes out of this.
Bloomberg's Michael Heath there. Thanks for all of the updates on the ongoing negotiations over the war in Ukraine. More ahead. This is Bloomberg. Take a look at how Japanese assets are setting up for the open here. We had seen some broad downside when it came to Japanese markets in the previous session, given BOJ Governor Ueda's more hawkish comments. Nikkei futures pointing to slight upside, though, so we might perhaps recover a little bit after the Japanese yen also rose and saw the best day in 6 weeks. It gave up a lot of those gains in the New York session, but we'll be watching the JGB space very closely as we still have the 2-year yield at the highest level since 2008. But we have seen the markets in Japan pretty supported this past year. We're talking about the Nikkei already gaining more than 20% this year. A lot to do with optimism over corporate governance reforms. We've in fact seen Japan become number 2 when it comes to the number of activist campaigns this year. Japan Exchange Group CEO Hiromi Yamaji, though, says activist investors are not yet a dominant force in Japan, even as they push for more from corporate Japan. Speaking on a panel at FII Priority Asia in Tokyo, Yamaji discussed whether these investors affect their business.
As a market operator, we are quite neutral about those activists, or I call them engagement funds. Just because we need to have everybody in our market in order to keep the abundant liquidity. So we don't we don't reject any specific kind of investor, or we don't show any favor to one specific type of investor. But we welcome everybody. But at the same time, I think think, there are a number of shareholders' proposals in our shareholders' meeting, and some of them, this year, by the way, 114 companies received 399 shareholder proposals. This is just in June this year. And about 137 was from the so-called activists. And only 7 of them passed at the AGM. And probably market cap-wise at this moment, about 1% of the total entire market cap is owned by the activists. I think UK is about 2% of the entire market cap, and the US is 1.1%. So we are not so much, the engagement funds is not so dominant in Japan yet.
You expect more activism in 2026, and
well, yes and no. Some of them, yes. Some of the proposals from the activists are not so illogic or unreasonable. I think some of them are quite reasonable, and I think I'd like to encourage management to be direct to those engagement funds, to have a direct conversation with them.
Japan Exchange Group CEO Hiromi Yamaji speaking on a panel at FII Priority Asia in Tokyo. Now to the latest from the corporate front, Goldman Sachs has agreed to a $2 billion deal to buy Innovator Capital Management, which specializes in so-called defined outcome ETFs. Innovator, with more than $28 billion in assets under supervision, sells ETFs that seek to limit downside while capping upside potential amid growing volatility. Goldman's own forays into defined outcome ETFs have so far met with a lukewarm reception. OpenAI taking an ownership stake in Thrive Holdings, an investment vehicle set up by top investor Thrive Capital. The deal adds to a growing list of circular transactions involving the ChatGPT maker and its backers, raising concerns the AI boom is being artificially propped up. OpenAI says the stake is in return for giving Thrive access to its teams as both companies focus on enterprise AI adoption. Top market-making firms Jane Street and Citadel Securities are on track for record trading revenue gains as they challenge Wall Street's dominance. Jane Street's third-quarter turnover jumped 18%, putting it behind only top players JP Morgan and Goldman Sachs. Citadel sales rose 9%. Both have benefited from market volatility, often fueled by President Trump's shifting policies. Now let's take a look at how developed market sovereign debt is faring, because it was, of course, about the rout in JGBs yesterday, fueled by Ueda-san's comments. We are seeing the firmness in JGB futures. We will check how the session evolves. But of course, what we really saw overnight was how the entire treasuries curve shifted higher. Global debt was hit. There are ripple effects from the JGB rout. Australia has a bit of its idiosyncratic concerns. Don't forget, we got data on housing prices yesterday. Things look pretty hot there. We have building approval data to contend with later today as well. But we are seeing that upward pressure continuing on Aussie debt. Same picture when it comes to New Zealand. We have more ahead on the Asia trade. This is Bloomberg.
I think I've had frank, good discussions at face-to-face meetings with the Prime Minister and economic ministers since last month. I intend to continue to keep close communications.
BOJ Governor Kazuo Ueda also stating that he's had smooth communications with Prime Minister Sanae Takaichi. His comments coming after Ueda gave the clearest hint yet that his board may raise interest rates soon, which really moved the markets. We saw that sell-off in equities in the Japanese session. Banking shares, though, supported because yields continued to rise and the two-year yield hitting that 2008 high. And today, of course, the big one is the 10-year auction. And after that two-year sale last week that showed weak demand, that is in focus today, at a time when the Japanese yen saw the best day in 6 weeks, but then again gave up most of those gains in the New York session. Joining us now is Mahjabeen Zaman, head of FX research at ANZ. Mahjabeen, always good to have you with us. I mean, we saw the signals coming from Governor Ueda, but does that mean that he could actually hike this month? And would that even make a difference for the yen at this point?
Great to be here. Look, I think that's exactly the right point, right? We've seen front-end yield shift by such a large magnitude, and yet the transmission to the yen has really not been there. Look, we expect the BOJ to only start hiking next year. January and April is marked in. So, this front-end move is, cyclical. It's volatile. It's going to shift, based on these expectations, whether it's December or Jan. But I think what we really need to focus on, or the market needs to think about, is the long-end yields and how high that is and how much higher that should be and what it really reflects.
What does it reflect? Is it the fiscal concerns here in Japan?
Yeah, 100%. I mean, the debt, the debt out there in Japan is, 240% of GDP. Yields, 30-year yields, JGB yields are around 3%, slightly higher than 3%. You compare it to UK, where the debt is around 80% and yields are 5%. So, don't you think, long-end yields should be much higher to reflect the fiscal agenda at the moment? Now, of course, yields have been artificially kept low over the past decades, thanks to the BOJ. BOJ holds a large portion of the JGBs. But, I think all of that is really what's weighing on the yen. If you don't let yields normalize to where they should be without maybe BOJ interference, maybe that might stabilize the yen a little bit. But I think, it's a push and pull. We're not really optimistic on the yen in terms of any positive outcome, despite the Bank of Japan, even if they go ahead this December.
On long-end concerns, to what extent have they been shifted a little to the short end of the curve, given the finance ministry's issuance plans?
Yeah, look, I think the issuance plans rightly have said that they have shifted because demand at the extremely long end has decreased. And we have seen that in the past couple of months, hoping that supply at the short end picks up. But, again, there's only so much supply you can have at the short end just because of the volatility it comes with when you think about interest rate moves and central bank moves. And I think you will not see a heavy uplift there, in exchange for how much you would see at the longer end. Just coming back really quickly to the inflation outlook as well. Look, I think we need to take a step back. Yes, inflation is moving up in Japan, but we need to think about some of that now will be offset with the fiscal stimulus and the cost of living support that comes through. Now, of course, if that comes through, it's a little bit of a disinflation shift on the supply side inflation. And then you might see that inflation that everyone's speaking about, it may not be sustainable at the 2% target.
So why then do you expect January, April as timings for hikes?
So we actually think the demand side has to pick up. Wages need to pick up. I think over the last 2 years, we have seen the Shunto negotiations work quite well in terms of wages shifting higher. And I think all eyes on that. The expectation is, based on the Tenkan survey, we do see that the corporates are in a fairly good space. They are positive in terms of their outlook and their capex spending years ahead. And I think that's going to weigh into the positive momentum in wages, which is the services inflation side of things, which will likely be the sticky one if it continues to shift higher, will sustain the inflation side of things for Japan.
And how much will the rate differential also really play into the picture now? Because we are expecting the Fed to also start cutting rates again, right? I mean, the narrative seems to have shifted after all of that dovish Fed speak.
Yeah, look, I think so far in the last couple of weeks, we have seen a little bit of a breakdown in that correlation of rate differentials and where the dollar yen is moving. But, at the end of the day, even with the adjustment for the BOJ, which broadly market, and we are looking at a terminal rate of 1%, Fed maybe another 3 cuts from here. Still, I think so far, despite the Fed easing by a large margin and the Bank of Japan raising what they have done so far. The carries trade is still in vogue, and we see that that momentum to continue because there is still a differential. And also one thing to note here is that the local pension funds, the lifers in Japan, continue to show preference for offshore assets, keeping the hedge ratios still pretty low from post-pandemic, just around 40%. So we need to really see a shift up in that as well. That will have implication for dollar yen.
Mahjabeen, what you're alluding to is also what we're seeing in terms of positioning in the markets. Given how markets have reacted in the past day or so, what is the risk here if the BOJ doesn't hike in 2 weeks?
Yeah, look, I think, we have seen dollar yen trade up above that 55 mark. And, for the last few weeks, we continue to see MOF and authorities coming out and, sort of intervening. I think here the concern is really not the level, but I think the volatility of the shifts in the yen. And this has happened many times in the past 2 to 3 years. We have seen intervention come in, and it's not been very successful in managing the yen, except for short-term moves. And I think, if we do see that, we might see a little bit of stability there. But again, all of this is coming at a time where there is a December Fed rate cut in play as well. And we have a bit of a divided Fed there. So we've got to see what happens on that end as well. That will come into play for the pair.
What about crosses? What are you expecting, not just on dollar yen, but what about Aussie yen? How much momentum are you seeing in those trades?
Look, I think for Aussie yen, we are pretty optimistic around the Aussie going forward. Year end, you do see seasonal effects and that coming into play for the Aussie and the Kiwi for that matter. And, overall, with a little bit of that more hawkishness being priced in by the RBA in terms of rate cut expectations, I think that will continue to lend support to the Aussie as well.
Mahjabeen, despite, of course, the gains that we have seen for some currencies, the likes of the Japanese yen, the Korean won, for example, still under a lot of pressure, right? And we have seen, of course, authorities either verbally or actually intervening in the markets. How much ammunition do Asian central banks or Asian governments have in order to defend their currencies? And I'm talking also about Southeast Asia, especially with a resurgence of the dollar.
I think that's a great question. And I think we're now speaking, we are in a different era where, surpluses in emerging markets or Asian markets are pretty strong, pretty loaded. And I think there's enough support in terms of intervention and preventing it. But then the bigger question is, how weak do they want their currency to move? Maybe they are now comfortable at a stage to have, with the weaker dollar now in play, maybe they want to now stabilize their currencies at slightly more competitive levels. So it's worth to see how that plays out into the year ahead.
Yeah, I think every time you speak to a currency official, they'll talk about the pace of either appreciation or depreciation, right? What you're seeing in the currency markets right now, is it, do you get a sense of more stability, or is the pace still a little bit rushed to a point where it would make some of these Asian officials uncomfortable?
Yeah, look, overall FX volatility is, on historical terms, pretty much at the lower edge of things rather than on the higher edge of things. And so I think that, in terms of intervention, it's market by market rather than overall Asia. So it's hard to put that in one bucket. Every economy is different, so hard to make a call on that. But I do think that volatility is much lower. And so the pace of shifts broadly will not be as sharp as we come into year end seasonal period.
Talk to us about some of the other interesting pairs that you're watching aside from Asia. What are your expectations on the pound? I mean, I guess this also speaks to what we highlighted early on in this interview, those fiscal concerns.
Yeah, look, I think it's a very interesting space to be in the UK right now with the budget coming out, with the tax hikes back, pushed back to 2029 and the rest. And I think what's interesting is how the BOE will respond. I guess with this inflationary budget, can they go a little bit more aggressive on the easing? We think, yes, we're now looking at an additional of 4 rate cuts. That's 100 basis points of cuts. Starting from this month and then 1 every quarter over the next year. And I think, that brings a lot of comfort. But also, I think at the same time, the BOE probably will face a little bit of challenges because, when they do the inflation forecast 3 years down the road, when the tax hikes are actually coming in and the energy bill cuts are reversed, you're going to see a little bit of the return of inflationary pressures. So that's something probably they are thinking about. All in all, what does that mean for FX? Look, I think it doesn't take the fiscal premium out of the sterling, which has been there. So again, not overly positive. And at the same time, if, from a carry perspective, if they do ease 100 basis points from here, that doesn't help the rate differentials either.
Talk to us about if you're watching specific levels or the extent in which you might see that pressure coming through.
Yeah, look, I think we have to kind of balance. Overall, we do see US dollar weakness, gradual weakness into next year at a much slower pace. And of course, different currencies will respond differently. Broadly, we spoke about the yen. Hard to see the yen significantly strengthening from here based on the different drivers, especially on the fiscal front. Same for the sterling. But we are a little bit more optimistic on the Kiwi dollar, for example, because the RBNZ have now approached the end of their easing cycle. And in fact, you start to see, sort of talks around when the hikes will start coming in, let's say end of next year or 2027. And so I think that rate differential story will continue to play in favor of various dollar crosses.
We've also seen some strength in the Chinese yuan as well. I think the highest level since 2024. So what sort of flows are you expecting to see in 2026, especially given that we're seeing that weakness in the Chinese economy continue, but at least when it comes to those tariff headwinds subsiding a little bit?
Yeah, look, I think the Chinese story is more a domestic demand story rather than an external export story. And we do continue to think that the yuan will gradually start to continually strengthening. And I think this comes in the view of just normalizing in line with which way the dollar is going. And I think that's going to continue, but it's going to be extremely gradual and a slow pace as we've been seeing so far.
Mahjabeen, thank you for your time and your insights. Mahjabeen Zaman is head of FX research at ANZ. Here are some of the stories we're tracking. A survey shows that Chinese export controls are forcing European companies to rethink how they operate. The poll released by the European Union Chamber of Commerce indicates that about a third of European firms plan to shift sourcing away from Beijing. One respondent also said that China's curbs will result in additional costs equivalent to around 20% of its gross global revenue this year. President Trump is encouraging Israel to maintain dialogue with Syria after a deadly military operation on the border further strained relations between the two nations. Trump on Truth Social also said Syria's new president is working to ensure that two countries have what he called a long and prosperous relationship together. While he did not explicitly criticize Israel's action, the comments marked a rare instance of Trump urging Israeli caution in the region. The White House has defended the Pentagon's handling of a September attack on a suspected drug-running boat off South America. It's denying a report that Defense Secretary Pete Hegseth had given an order to kill everyone on the vessel. Spokeswoman Caroline Leavitt confirmed 2 strikes on the ship, but says the order for the second attack came from a U.S. Navy admiral, not Hegseth.
President Trump and Secretary Hegseth have made it clear that presidentially designated narco-terrorist groups are subject to lethal targeting in accordance with the laws of war.
For more on shifting global political dynamics, you can hear Taiwan's perspective on tensions between Japan and China in an exclusive interview with Taiwanese Foreign Affairs Minister Lin Chia-lung later today. We have more ahead on the Asia trade. This is Bloomberg.
We're keeping an eye on Warner Brothers Discovery after Bloomberg learned that it fielded a second round of bids, including a mostly cash offer from Netflix. For details on the auction, let's bring in Chris Palmieri, who leads our media and entertainment coverage. He joins us live from Los Angeles. Chris, so how significant is this offer from Netflix?
Well, it's a big deal. I mean, the very fact that Netflix alone was interested in buying Warner Brothers was surprising when we learned that a few weeks ago. Of because they historically haven't done big deals like this. But then it was always assumed that they'd be using their stock, which has been a really terrific performer, to do an acquisition. But today we learned that it's actually a mostly cash offer. So we're talking, it's something in the orders of tens of billions of dollars in debt that Netflix would take on. But obviously they see this as an opportunity. It would really be revolutionary in the entertainment industry.
How exactly would this revolutionize the streaming industry, the entertainment industry, if Netflix is indeed successful?
Well, Netflix has historically grown these franchises, if you think of Stranger Things or Squid Game itself. And in taking over Warner Brothers, they'd be acquiring Superman, Batman, Harry Potter, all these amazing stories already done. And have an opportunity not only to put the existing TV shows and movies on their streaming service, but really expand on those characters and those worlds.
And it's interesting how this all came about, right? I mean, Warner Brothers putting itself up for sale in October after receiving multiple offers.
Right. It was actually David Ellison who just took over Paramount in August who started this whole thing and made an unsolicited offer for Warner Brothers. Funny that, Netflix was sitting around the whole time, could have bid for Warner Brothers, didn't, and instead felt like it had to take action here. Another significant thing is they'd be taking out HBO Max, a really, big competitor globally, that would be subsumed by Netflix.
Interesting moves when it comes to who's bidding for Warner. Chris, thanks so much for running us through all of this. Bloomberg's Chris Palmieri, who leads our media and entertainment coverage in Los Angeles. We have more ahead on the Asia trade. This is Bloomberg.
Inflation is the #1 public concern here in Japan, but one part of the economy is proving to be immune to rising prices. That's pop idols, YouTubers, and cartoon characters. Bloomberg Opinion columnist Garode Reedy joins us now for more on this. And Garode, this is just fans continuing to spend.
Absolutely. Well, it's obviously, fans have been spending on stuff since the dawn of time. But what we're seeing here, and this is catching the attention of a lot of businesses as well as the Bank of Japan, is that even as people are cutting back on other parts of spending, cutting back on food, making sure they don't use too much electricity, spending on fandoms, on this term, oshikatsu, as I have in my column this morning, is seemingly unaffected by inflation. Over half of people in a recent survey say that inflation has no impact whatsoever on their spending on these activities. That's why it's catching the attention of companies like Sanrio, as well as the Bank of Japan, which is very interested in a part of the economy that is unaffected by inflation and also helps to boost regional economies.
What about the demographic, the part of the population that is responsible for such spending? Why should they be a force to be reckoned with?
One thing about this, one of the reasons that this is catching so much attention, this current sort of spending boom, is because it is a lot of the people who are engaged in it are Gen Z. Everyone likes to attract, consumers from Gen Z. And a lot of them are women, which makes a difference to, previous spending that we've seen. If you go back and you think about, maybe a decade ago, people were into AKB48 and stuff like that. Very kind of geeky, nerdy, not exactly something that companies are dying to be associated with. What we're seeing now is that you're seeing, teenage girls, young women, these people who are very much sort of like arbiters of cool in society, they are taking part in this spending. They're spending a lot of their disposable income on it. And in fact, they're spending more than the disposable income. This is a quote from the CEO of Sanrio to the Nikkei a couple of weeks ago. He noted that people used to just spend their disposable income on, characters, on supporting these groups and characters and people that they liked. Now they have made a completely different spending category within their budget, and that is the one part of their budget that they won't reduce, even as they reduce spending on other things as prices for stuff such as food goes up.
I'm surprised that you say that even policymakers are starting to pay attention. How big is this part of the economy, and can it actually spur growth, like broader growth in other parts of the economy to support Japan?
Well, it's very hard to tell, I think, exactly how big it is, because one of the things about Oshikatsu is that, I think if viewers can go through my column, you'll see that perhaps we're all engaged in it. But one estimate has it at about $22 billion. There's an estimate that 1 in every 10 people is engaged in it. And that increases dramatically to 50 or 60% as you go down into younger generations. You go down into, as I mentioned, teenage girls and women in their 20s. That's a lot of money, and it's a lot of money that is available to companies and available, I think, also to regions, because what you see is people will travel to different regions to go follow their favorite pop band. Think about how people, a good way to think about it is how people will travel around, watching Taylor Swift. They'll go to her concerts in multiple cities and buy CDs. It's like that, but for a lot of different things.
The impact of the Swifties. It's so interesting how teenage girls have made policymakers sit up and listen. Gerard, thank you. Bloomberg Opinion columnist Gerard ready for us. Now let's take a look at how Asia benchmarks are faring. Of course, we are poised for rebound in the region following on from that sell-off we saw in the previous session. Taking a look at the ASX 200, slight gains here. And even though the currency, the Japanese yen, is holding on to some of those gains, Nikkei futures are pointing still to that upside, as are Kospi futures, Shery.
Yeah, the Japanese yen actually losing about 5% already against the dollar this quarter, the worst G10 currency in the past quarter. And today, of course, we're watching the debt markets very closely because it will be really about that 10-year JGB sale, especially after the 2-year sale last week spurred weak demand, coming at a time when we already saw JGB slumping in the previous session with BOJ Governor Ueda's more hawkish comments. We have the 2-year yield at the highest level since 2008. That really led to that global bond sell of treasuries also fell. So this is going to be a global event. So do watch out for that auction. The market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. We'll be watching those tech names across the board today after Nvidia invested $2 billion in chip design software maker Synopsys. So Avril, really, Jensen Huang everywhere at this point. We'll also be watching the Japanese markets, of course, with the BOJ Governor Ueda making waves.
Absolutely. His waves ripple through into global debt markets, Shery. We saw that in treasuries, and certainly the entire curve upward move is what we saw. So that's something we're going to be tracking in the session for the moment.
Yeah, especially after Governor Ueda talked about meeting with Prime Minister Takaichi, right? I mean, there were expectations that he wouldn't be able to hike this month, but he has changed the market pricing right now when it comes to that move. Take a listen.
I think I've had frank, good discussions at face-to-face meetings with the Prime Minister and economic ministers since last month. I intend to continue to keep close communications.
So we saw the 2-year yield rallying to that 2008 high. And of course, today will be the 10-year JGB auction that will be in focus. The yen also rose and saw the best day in 6 weeks. It gave up some of those gains in the overnight session. The Nikkei still supported 0.4% after that downside that we saw in the previous session. We continue to watch those banking shares, which were supported with rising yields. Take a look at how South Korea is also coming online. We got the November consumer price data rising 2.4% year on year. year, which was beating economists' expectations. Of course, the Bank of Korea really watching inflation very closely as we continue to see a weaker won pushing prices up. You can see the Korean won still weakening against the U.S. dollar, and that divergence in recent days between the Kospi and the Kosdaq, Avril.
Yeah, on those tax advantages for the smaller cap gauge stocks. But we are also seeing the weakness in the Korean won coming despite the dollar having come under pressure, the continued bets of what we're going to see from the Fed next week. But despite this, it's still about what we saw, those ructions from JGB markets. For the moment, look at how the U.S. 10-year yield continues pushing towards the 410 level. That's something that could be a bit problematic for this week. We know how, in terms of JGBs, we are expecting more volatility, especially as you alluded to earlier, that 10-year auction. And of course, a lot of this overnight was to do with the Bitcoin selling, those leveraged bets, getting hard hit, liquidation of about $1 billion. So that risk off in the markets. But you are seeing a bit of stability or some semblance of it coming back in. U.S. stock futures are pointing flat for the moment. There is still that optimism that given how we saw the shopping data, right? Cyber Monday, Black Friday, those numbers came in quite solid, that stocks still have room to run. Let's get more on markets and bring in Asia Markets Executive Editor Paul Dobson and Japan stocks reporter Alice French. Paul, let's start with you first. So we are seeing a bit of that concern in the early days of December. What do you think, given the ructions in the past day, the rest of December might look like?
Yeah, it's very hard to see where we're going to go from here. Seasonally, of course, people often talk about the Santa Rally, the equities typically do well into year end. But we've got these key central bank meetings coming up, and that throws a lot of uncertainty into the picture, particularly when we're still in the data kind of fog in the US, not getting everything coming through because of the government shutdown earlier on in the year. It feels like, you know, those nerves that we saw in November, although they had dissipated in the last week or so, are back, right? Especially in the crypto, where people like to express that. But also, you know, kind of we're seeing that in some of the higher riskier areas of the market as well. So it's difficult to see, you know, how does the market calm down and just kind of get on with things if we get more of the good news flowing through from the AI space, like we were talking about, you know, Jensen Huang being everywhere, trying to reassure people. And we've got a new DeepSeek model to celebrate as well. Then maybe the market latches back onto that trend again and everything settles down and stabilizes. But like you said, yeah, at the moment things are looking a little bit choppy.
Alice, at least Japanese equities seem to have stabilized a little bit and they're just carrying on at this point.
Yeah, I hope so. And I think we had a lot of support yesterday from the banking shares. As you say, overall, it was a down day, the Nikkei down around 2%, but those banking shares really rallying. And we know that they have, you know, driven a lot of the rally over the past couple of years, really, in Japan on expectations for these rate hikes. And now that it looks like a hike might be, you know, more realistic this month, a lot of investors seem to be expecting that those banking shares will help the overall market to kind of grow into the year end. Of course, we still have those tailwinds from AI. As you mentioned, we had the Nvidia news overnight. I think there's still a lot of kind of momentum behind that too. But at the same time, there are jitters, there is caution. As Paul was saying, you know, we've got obviously the sell-off in crypto. There does seem to be, you know, a little bit of a risk-off mood still creeping in there. Of course, we know as well if there's a rate hike, that is typically not the best for equities, and that is definitely some caution around that. There's caution around government spending and the fiscal burden. So I think it could go either way really this month, and we'll have to see how it plays out kind of, you know, this week and the next few weeks.
What about the impact of the yen on stocks as well? And how might that affect what we're seeing in the larger cap stocks?
It's a really good question. And I mean, yesterday it definitely played out as a negative, particularly like you say, for the large cap Nikkei and the exporters. We saw Sony losing over 3% yesterday. I think a lot of that was because of the yen strength. Having said that, we do know that over the last kind of couple of months, the sort of correlation between the yen and the benchmarks, especially the broader topics, does seem to have been getting a bit weaker. It's not just as simple as saying when the yen strengthens, stocks lose out. And I think a lot of that does come from the fact that there is a lot of hype and kind of positive sentiment around things like AI. Now, of course, in the background, we do have other geopolitical issues. We know that there are still, tensions with China that's weighing on things like tourism and airline flights. Retailers, department stores may end up getting hit by that too, sort of the sentiment around them. But yeah, I mean, look, if the yen does rally a lot into the year end, I think we can assume that it will be a weight on stocks, but it seems a bit too early to kind of suggest that there'll be a massive rebound in the next month. But it will definitely be something to watch, and investors will be kind of keeping an eye on those yen movements for the stocks for sure.
And Paul, global investors were also watching the JGB slump given BOJ Governor Ueda's comments, right? But Treasuries also dealing with its own corporate bond sales issues right now.
Yeah, so I think the corporate bond sales definitely added to the pressure on US Treasuries. In the session yesterday, pushing yields only up to 4.1% or thereabouts. So, we've been hovering around that 4% mark for quite a long time. Don't think there's any reason to be unduly panicky about it. On the other hand, people are talking also about what's going to happen with the Fed if they continue to cut. Is that going to steepen the yield curve? We saw a little bit of evidence of that again yesterday. The idea that we have lower interest rates now, but that builds up future inflation risks, and weighs on the back end of the yield curve. So there is that tension as well playing out again in the Treasury space. And that rebounds and hits back to the Japanese government bond market as well as the domestic pressures that we're seeing there. So some interesting dynamics playing out, and that 10-year auction, as we've been talking about, is definitely going to be in the spotlight today to see whether, these yields, investors are going to come back into the JGB space a little bit more.
Paul, can you talk to us about the messaging that Ueda, the signals he's sending to the markets?
Yeah.
Because we kind of have been here before.
Right. You've heard me say before, the BOJ always chickens out, right? They always have this opportunity. I mean, just get on with it, really. Everything is set up for them to be able to hike. Inflation still running above target. The labour market looking relatively robust too. And Takaichi has set out her stall now, so you don't need to wait for her anymore, really. And the market has already priced in the idea that the BOJ is going to hike. So they've been ultra cautious. We know that they don't want to blow things up. They don't want to ruin the inflationary impulses that we're seeing right now, having had so long where we've been anchored right on the floor with low or negative yields. But it feels like if they don't go now, then when are they going to go, basically? They have this nice window. The Fed goes first. They can see what the market reaction is. They can, if everything goes against them, choose to delay. But once you've got the market pricing in this kind of a possibility and not panicking, then it feels like, it's set up as a green light for them to go ahead. And like you said, we've had this conversation before, and they have surprised us by not moving. So let's see.
Yeah, Alice, as Paul was saying, I mean, if the BOJ gets on, we have actually seen already some parts of the market pricing that in. Bank shares were up. Any other themes that we should be on the watch for?
Yeah, so look, I think it might be all about the BOJ for the next couple of weeks. But in the background, we still have, these things like corporate governance. I know that you were talking to Yamaji about this yesterday. It's still a big theme, especially for the foreign investors. We're still seeing, much higher levels of activist investment here. We know that Takaichi has come out and said that she might be interested in reforming the governance code. Okay, so I think people will be keeping a close eye on that. What exactly will that entail, and might it actually end up putting the brakes on some of this progress? But at least in the immediate term, it does seem like that's still a driver. Companies becoming a lot more capital efficient, focusing on shareholder returns. We've seen record levels of buybacks and stock splits that are really driving sort of buying into Japanese stocks, and I think is still viewed as one factor that could kind of help, Japan outperform some of its regional peers going into 2026. So that's a theme that I think people will be keeping an eye on. Of course, the BOJ in the background, the tensions with China, AI. There's a lot of things to be keeping yourself across as we go into the year end. But I think corporate governance, it remains a supporter for the stock market.
Paul, crypto players also watching the BOJ. Yesterday, around this time, we were trying to figure out what led to such heavy selling. Mm-hmm. And then we fished around, there were some indications that it might be to do with yen carry trade unwind. What do you make of a logic like that? And might we see more of this?
Well, I do think that there's, that whole liquidity argument in general is in play a little bit. And as the BOJ starts to raise interest rates, then that sucks a little bit more liquidity out of the system. Central banks are just coming to the end of their QT cycles, maybe. But globally, there's not so much spare money flooding around around. So the idea, things like the carry trade are things that aren't quite so easy to facilitate these days as they once were. I think crypto, we've had a couple of these Monday morning kind of attacks as well, though. I wonder what it is about the timing. If people decide that this is when we can really trigger through all of those liquidations in the retail market, catch people unawares, or there's just an opportune moment to move, or maybe it's start of a new week, don't really feel confident in buying, why don't we sell a little bit as well and test what the support looks like, and that's how we sort of broke through it a little bit. So I think, there's a couple of factors, but crypto, of course, has its own peculiarities and tends to be very trending, so once it's going in one direction, it doesn't stop for a long time, as we've seen before.
Bloomberg's Paul Dobson there in Singapore, also Alice French here with me in Tokyo. Great conversation, you guys. We do have more ahead on the Asia trade. This is Bloomberg. DeepSeek has unveiled 2 new versions of an experimental AI model that rivals offerings from OpenAI and Google. The update adds fresh capabilities the startup says will help with combining reasoning and executing certain actions autonomously. For more, let's bring in Asia tech correspondent Annabelle Druller. So, Belle, how powerful is this AI model?
Yeah, well, to your point there, they're saying that it's really comparable to what you're seeing from the latest, from the likes of Alphabet's Gemini, for instance, also OpenAI as well. So certainly at a benchmark that DeepSeek says rivals the best technology coming out of the States. But just to take a step back and talk about exactly what's happened here. So in September of this year, DeepSeek released the so-called V3.2 EXP or EXP, a nod essentially to its experimental status. Now we've actually got 2 new versions of that experimental model that have come to market. So there's the V3.2, and the company is saying this one here, it has, again, strong capabilities. They're comparing it to ChatGPT 5, for instance, from OpenAI on a range of different performance benchmarks. They're also saying it has some agentic capabilities inbuilt. So agentic capabilities, you're adding a sort of human reasoning here, and they're saying that this is a model that can use tools like search engines, calculators, code executors as well. So that's the first version. The second version they're calling V3.2 Special. And this is a version that they're saying actually has an ability to focus on mathematical computations, more long film or long thinking capabilities as well. And they're saying that the goal here is really to push the inference capabilities on open source models to their limits, explore the capabilities of models as well. But they're saying that one matches the performance of the latest Gemini 3 Pro. So again, going back to your point, yes, these are essentially a Chinese player going that open source approach, doing more with less, but able, they're saying, to meet the best from the States.
Doing more with less is DeepSeek. Nvidia is piling in investments to build out its infrastructure in terms of $2 billion to Synopsys. Talk to us about that tie-up, that partnership.
Yeah, so this is, as you said, it's an investment that represents essentially about 2.6% of outstanding Synopsys stock. Nvidia has picked this up for around $415 a share. You did see a bit of a surge in the session as well, though it did pare some of the gains into the close. But essentially what's happening here is that Synopsys is a company that produces chip design software. So you have a chip IP from a company like ARM, for instance, but you need that software to then go and develop the chip. You also need the software to validate the chip or to test it essentially before it goes into the fabricator like TSMC. So in this partnership, Synopsys is going to be using Nvidia's infrastructure and integrating it across its engineering or software lineup. But Jensen Huang actually spoke about this new deal on Monday. Let's listen to what he had to say.
This is one of the largest compute-intensive industries in the world. It has not been serviced, not been addressed by accelerated computing until now. And we're accelerating that process with our deep partnership. Together, we will address nearly every industry.
So what Jensen Huang essentially outlined there is his hope for the deal, and that is that Synopsys, through using Nvidia GPUs, for instance, can essentially allow a broader and faster adoption of AI across a range of different industries. It's important to note that, of course, when you see Nvidia making any sort of investment, it does raise those fears or the questions, is this another circular deal that's happening? The company would say this isn't. It's not tied, for example, to any specific purchase agreements, but it will be an interesting one to watch, given it's just another infrastructure play that you're seeing Nvidia making, similar to what it made in Nokia, for instance, earlier this year, but also Intel as well just a few months back.
And Bloomberg Asia tech correspondent Annabelle Drewler's there. And we're also following some other corporate deals. Bloomberg now learning that Warner Brothers Discovery has received a mostly cash offer from Netflix as it fields a second round of bids. Sources say the offers are binding, which means the board can sign off on a deal quickly if its goals are met. Warner Brothers, a parent company of HBO, CNN, and its namesake film studio, officially put itself up for sale in October after receiving multiple unsolicited offers for all or part of the company. Top market-making firms Jane Street and Citadel Securities are on track for record-trading revenue gains as they challenge Wall Street's dominance. Jane Street's third-quarter turnover jumped 18%, putting it behind only top players JP Morgan and Goldman Sachs. Citadel sales rose 9%. Both have benefited from market volatility, often fueled by President Trump's shifting policies. Airbus will inspect hundreds of its best-selling A320 jets for potential quality flaws in the aircraft's body, risking the company's last-ditch effort to meet its delivery target. A total of 628 jets contain panels that may be either too thick or too thin due to a manufacturing issue at a supplier. Of these, 168 planes are already in service with carriers, and the rest are at various stages of production. That's according to materials from a presentation seen by Bloomberg.
Now, Shery, those fuselage panel issues that you speak of on top of the software glitch issue that we already saw from late last week. And if you look at how European stocks fared overnight, it was a red start to November. Futures are flat for the moment, but it's worth noting that Airbus was the big drag on the index. Going the other direction was ASML. It was the biggest gainer on Euro Stoxx 50 after JP Morgan picked it as its top pick in the chip sector. And of course, Airbus dropped by the most since the month of April. We are watching as well the defense sector, some declines there amid those peace talks, given how U.S.-Ukrainian negotiators say they had a productive discussion about a framework for the Ukraine-Russia peace deal. That's what we're seeing in Europe for the moment. Meantime, the EU's chief diplomat is warning that President Trump's efforts to push Ukraine into a peace plan could end up fueling Russian warmongering. And this comes as U.S. Special Envoy Steve Witkoff travels to Moscow for peace talks. Ukrainian President Volodymyr Zelensky had expressed positivity over the new language in the draft deal, but maintained that territory remains the most difficult topic.
And on the topic of security guarantees, we have concrete details from the US, concrete details from Europe. I'd say these are the three main topics, tracks, but also triggers. We need to be very careful here. I thank our negotiation teams. The plan looks better.
A survey shows that Chinese export controls are forcing European companies to rethink how they operate. The poll released by the European Union Chamber of Commerce indicates that about a third of European firms plan to shift sourcing away from Beijing. One respondent also said that China's curbs will result in additional costs equivalent to around 20% of its gross global revenue this year. For more on shifting global political dynamics, you can hear Taiwan's perspective on tensions between Japan and China in an exclusive interview with Taiwanese Foreign Affairs Minister Lin Chia-lung later today. We have more ahead on the Asia trade. This is Bloomberg. Authorities in Hong Kong say last week's deadly apartment block fire was accelerated by construction workers using cheap, substandard netting and evading government testing. Let's go to Hong Kong and our China correspondent Mimin Lo. Mimin, earlier testing showed that the netting met compliance standards. So how did the contractors allegedly evade these government inspections?
Yes, the authorities had taken 20 samples of the nettings from the site of the fire and found that 7 out of the 20 had failed to meet compliance tests. And they found that the contractors had wrapped the base of the buildings with compliant materials in order to pass inspection tests. But the nettings at the higher levels and the harder to reach areas were mostly non-compliant and costing about half the price of the compliant materials. And to give you context of the scale, they had bought 2,300 rolls of the non-compliant materials and just 115 rolls of the compliant netting. So in total, based on the prices that had been reported, they had saved about 100,000 or so Hong Kong dollars at the expense of many human lives. The death toll now at 151. Authorities have now arrested 11 people in addition to the 10 people in addition to the original 3. They include middlemen, include consultants, subcontractors. Some of them are out on bail and some are still in custody at the moment, and the investigation could take 3 to 4 weeks to conclude.
What about the search efforts? How are they progressing?
So the authorities still have about 2 more buildings that they are continuing to search, and they have found bodies in the apartments, in the corridors, on the rooftop. They also said that it's possible that they may not be able to locate all bodies because some of them had been burnt to ash, and as of now there are about 40 or so cases of missing persons still unaccounted for. Of the 151 deaths so far, there are construction workers who are among the dead. There are foreign domestic workers as well. Over 100 of those people have been identified, but the remaining ones are still of unconfirmed identities. But meanwhile, the support for the victims continue to pour in. We're looking at the special fund that the government started originally with 300 million Hong Kong dollars. That is now ballooning to 1.6 billion Hong Kong dollars, which gives the government more funds to disburse to the victims.
Bloomberg's China correspondent Mimin Lo with the latest on the Hong Kong fire that, of course, took more than 100 lives, and we'll bring you more updates on the latest developments as we get them. We have more ahead on the Asia trade. This is Bloomberg.
We have data crossing the terminal out of Australia. Building approvals on month, that is declining more than expected by 6.4% versus the survey estimate of 4.5%. The prior reading was a gain of 12%. Of course, this is coming against the backdrop of us really seeing upward pressure in home prices in Australia that to some speaks to an RBA that is done with its easing cycle. Let's take a look at how Australian stocks are faring today. It's also after the sell-off yesterday and the extent in which a rebound is underway, looking quite tepid still on the Australian gauge. The Kospi is pulling ahead. For the moment, we are seeing the Nikkei also hanging on to some of those earlier gains, and this is despite the relative strengthening in the Japanese currency, Shery.
Yeah, let's turn to China because one company, China Vanke, is now seeking a 1-year delay to repay a 2 billion yuan note originally due on December 15th as it faces mounting liquidity pressures amid waning state support. Bloomberg's China credit reporter Trista Lu joins us now from Hong Kong. So, Trista, I guess the significance of this is what it really tells us about the broader Chinese property sector.
Yeah, so Vanke is actually seeking to delay that yuan bond payment for a year. I think that plan is worse than lots of investors' expectation. And Vanke also have another yuan bond due late December. So right now, investors are expecting that yuan bond will, get the same treatment. I think actually underscores that the waning support from the government side. And right now, it's actually, Vanke need to deal with its yuan notes by themselves. And we need to remember that by the end of next June, Vanke will have more than 13 billion yuan notes coming to due. So investors are right now also questioning, after this 1 year delay, what could Vanke do? Could Vanke, repay the bonds? Or it's also possible that they could see another delay, or there will be a restructuring coming at the end.
On top of perhaps where we are 1 year from now, what else are you watching next on Vanke?
Yeah, so next week on December 10th, Vanke will organize a bondholder meeting, try to gain support about the yuan bond delays. And then we will definitely watch closely how much support they can get from there. Because if they cannot get enough support, it will be a default. And as I mentioned earlier, there will be more than 13 billion yuan notes coming to due by next June. So investors are definitely watching like how Vanke will deal with those yuan notes.
And investors have been watching, of course, data on home sales from China, but it seems that Bloomberg has learned that Beijing is trying to keep those away from the public, at least for two private agencies. What do we know at this point?
Yeah, so we learned that two private data agency provider are actually, were told by China's Housing Bureau to, suspend that kind of data to make it non-public so far and until further notice. So that move actually comes as, Vanke, as we mentioned earlier, seek to the delay of their yuan payment. Analysts are telling us this definitely adds uncertainty to China's already fragile housing sector, and analysts are also expecting the November data in the new home sale will slump further compared with last month.
Trista, thanks so much for running us through these nuances in the property market in China. Bloomberg's China credit reporter Trista Xinyi-Luo. Now, we are seeing how, interestingly, despite the distress in the property sector, these trade tensions, despite a recent truce with the U.S., how the yuan is still headed for its best annual performance in 5 years. And this is really amid the growing optimism about the country's assets and economies managing to outweigh some of these trade tensions. We've seen offshore yuan for this year so far managing to strengthen nearly 4%. And a lot of it, of course, has to do with these daily fixings from the PBOC that have helped to guide the yen a bit stronger. And of course, Shery, we've been watching dollar yen as well.
Yeah, after being the worst performer in the G10, at least in the past quarter, losing about 5%, we saw a little bit more support given the Bank of Japan Governor Ueda's more hawkish comments, and perhaps a little bit of support also coming from government officials. I mean, we had heard the BOJ Governor Ueda had met with Prime Minister Takaichi, that they were on the same page when it comes to monetary policy, because there were a lot of concerns that perhaps Takaichi wanted looser monetary policy. Well, we're now hearing from the Finance Minister Katayama, specifics of monetary policy should be left to the BOJ. That was also echoed, almost same sentence, by the Growth Minister Kiuchi as well, at a time when Governor Ueda is now signaling perhaps a hike to come as early as this month. We're still seeing a little bit of a rebound on the Nikkei after that sell-off in equities in the previous session. Of course, there's a corporate governance story that's also at play here in Japan. Japan Exchange Group CEO Hiromi Yamaji saying that activist investors, though, are not yet a dominant force in Japan, even as they push for more from corporate Japan. Speaking on a panel at FII Priority Asia in Tokyo, Yamaji discussed whether these investors affect their business.
As a market operator, we are quite neutral about those activists, or I call them engagement funds. Just because we need to have everybody in our market in order to keep the abundant liquidity. So we don't we don't reject any specific kind of investor, or we don't show any favor to one specific type of investor, but we welcome everybody. But at the same time, I think there are a number of shareholders' proposals in our shareholders' meeting, and some of them, this year, by the way, 114 companies received 399 shareholder proposals. This is just in June this year. And about 137 was from the so-called activists. And only 7 of them passed at the AGM. And probably market cap-wise at this moment, about 1% of the total entire market cap is owned by the activists. I think UK is about 2% of the entire market cap, and the US is 1.1%. So we are not so much, the engagement funds is not so dominant in Japan yet.
You expect more activism in 2026, and
well, yes and no. Some of them, yes. Some of the proposals from the activists are not so illogic or unreasonable. I think some of them are quite reasonable, and I think I'd like to encourage management to be direct to those engagement funds, to have a direct conversation with them.
Japan Exchange Group CEO Hiromi Yamaji speaking on the panel at FII Priority Asia in Tokyo. Coming up, multi-currency travel payment platform YouTrip joins us to discuss their entry into Australia. More details on their expansion plans ahead. This is Bloomberg.
Welcome back. Our next guest runs Singapore-based firm YouTrip, a multi-currency payment platform that processes over $15 billion a year. The company also operates in Thailand and will now launch in Australia, and this marks its first entry into a new market since the pandemic. Joining us now is co-founder and CEO Cecilia Chu. Cecilia, really good to have you in the Singapore studio.
It's really exciting to be here.
Exciting because it's the launch of your Australia product. But talk to us about why Australia. Why do you see so much opportunity in that market?
Yeah, absolutely. Today is a very special day for us. Going live in Australia, and YouTrip is a multi-currency digital wallet that comes with a travel card, so users can actually use us to buy anything online, offline, around the world in any currencies at the best FX rates. We started a business 7 years ago here in Singapore, 2018, and now we are category leaders in both Singapore, Thailand, serving millions of travelers. And Australia, it's a really important and strategic market for us. What we are committed to do is actually to invest into the market for the long term. Australians love to travel, just like many of us. Every year there's more than 12 million people going overseas and spending more than $50 billion on this category. We think it's going to be such a strategic choice for us to be there. And many of the people also tends to make longer trips. What we saw in Singapore, Thailand, we tend to travel about 6 to 7 days each time. For Australians, they like to make longer trips, like 15 days on average each time. So I would say that, for our no-fee proposition, best FX rates, we hope we can actually make a meaningful impact on how they travel and how they spend.
That said, Australia is a market where we do have already quite long-established, local-grown players. Yeah. How do you expect to differentiate yourself?
So absolutely right. In terms of the banks who also might have a very similar offering to us, I would say we differentiate ourselves with our laser focus on the traveler segment, on the cross-border segment. So when you really take a look at the big banks, right? So they do many things. They have saving products, they have lending products, they have mortgages, they might have 20 cards in just the card portfolio. So how we differentiate is over the last 7 years, we actually have created and optimized our business model, our pricing, our partnership network, and also our product features to be sure that we actually offer the best and most competitive product for travelers, in any of our markets.
Cecilia, that sounds like you're going to need a lot of employees to do all of that. Your expansion seems to be accelerated at this point. What does your workforce look like? Are you hiring more? What regions are you putting more people in?
So a key part of our market expansion strategy is localization. So, of course, over the years, we now have 300 people in the business and we're growing in size. But for Australia, we have established a Sydney office. We are building up our team. We already have boots on the ground. And most importantly, we are going to do much more in the market. So we are going to have partnerships team. We are going to have customer operations. We are going to have product, compliance, marketing, really all aspects of the business. So I would say localization is a key aspect when we think about our strategy going forward, when we think about growth, because it's very important for us to show that deep understanding and also appreciation of the local preferences and also the local culture and people.
I think it's fair to say for Australians, prices are getting higher, also for the rest of the region. Does that affect how people use your travel-related fintech services?
Yeah, absolutely. So, our core mission of the business is actually to really use technology to help consumers and businesses also to save money and save time. So what we take pride of is really to create a business model that is sustainable so we can consistently provide the best rates and also the best value, but also a really easy to use app. So when you download an app, you realize that it's very quick to sign up. It's very easy to use, very intuitive. And so, we are excited that we can bring our products to many more travelers, hopefully in Australia, so that they can achieve more by spending less.
It's really interesting how your business model allows you to give users such competitive rates. How competitive will they continue to be? How committed are you to that? And when it comes to Australia users, what are the currencies that they engage the most with, if you already have a sense of that in some way?
Yeah, so Australian actually not very different from some of us in Singapore, in the sense that they like to go to Bali, they like to go to Southeast Asia countries like Indonesia. They also really enjoy going to Japan, which I expect Japan's going to be a big market, big corridor for us, especially in December. So actually many of the corridors are quite similar to us. But what I would add is the way that we can provide a good rates is really through our technology and infrastructure. So from the get-go, we have chosen to actually get all our licenses by ourselves. So we handle all the tech integrations, our proprietary technology platform to process transactions. Everything is actually done in-house so that we know every bit of our supply chain very well. So we are very committed to do it over the long run. And, one example that I can share is perhaps our track record. So in Singapore, when we launched in 2018 and compared to now, our rates have only improved actually with our volumes continue to climb. But most importantly, even in the more challenging times such as COVID, we are still very, very committed, always providing the best value, best rates.
All right. Cecilia, great to chat. Thanks for coming in and congrats on the launch today. Cecilia Chu is CEO at YouTrip. Now we have more on Australia ahead every Tuesday at 11:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. Find it on Apple, Spotify, or Bloomberg.com. We have more ahead on the Asia trade. This is Bloomberg.
Japanese bonds continuing their way down as we are now seeing the 30-year yield at the highest level since 1999. That's when the bonds debuted. And this, of course, coming as we continue to see more certainty that that December rate hike by the Bank of Japan might happen. We got those indications from Governor Ueda. Now we're getting policymakers saying that the government is in line with the Bank of Japan, that there's no disagreement with the Bank of Japan on the economic view. Of course, that was the speculation after Prime Minister Takaichi came to power, and we know that she prefers looser monetary policy. Katayama also talking about transparency on spending being vital for fiscal trust. Of course, this was another issue that was pressuring the JGB space, given fiscal concerns here in the country. We do have a 10-year JGB auction that we'll be watching very closely in today's session as well, Avril.
Shery, you talk about government spending. Let's talk about consumer spending as well. Shopify shares falling after an analyst said the pace of spending at the e-commerce firm moderated during the Black Friday period. Still, the company's president, Harley Finkelstein, says they're seeing a rise in consumer confidence and spending. He spoke to us about trends they're seeing this holiday season.
Friday was another record-breaking Black Friday weekend. We saw about $6.2 billion in sales for Black Friday. That's up about 25% from last year. We saw peak sales of $5.1 million per minute on Friday. That happened around noon on Friday. That's up from $4.6 million last year as well. And if you pull up, actually, anyone can see this bfcm.shop. You can actually see global commerce happening right now in real time. We are currently seeing about $2.5 million per sales per minute, about 25,000 orders per minute, and we've seen just shy of 70 million unique shoppers buy from Shopify stores. So it's certainly shaping up to be another great day, and happy to go into some of the merchants and some of the trends that we're seeing across Shopify.
Harley, what I'd like to do is actually take a sort of geographic breakdown. Yeah. Because in the limited data that we went through with Spencer, I think we're recognizing different speeds of growth in particular. US versus Europe. Could we start there?
Yeah, sure. I mean, look, if you look at top-selling countries across the world where Shopify sells, we have millions of stores. In places like the U.S., we power 12% of all e-commerce. So we have a really great view of things. U.S., U.K., Australia, Germany, and Canada are the top 5. If you look at top 3 selling cities, you see L.A., New York, and London. In U.S. alone, L.A., New York, and San Francisco were the top 3. The other thing that we also saw is cross-border, but 17% of orders were cross-border orders, so shipped to a different country as well. And then in terms of top trending merchants that we saw Hatch, which is sort of this, it's called the Restore 3, which is this phone-free alarm for kind of morning routines. Crunch Labs has a sort of kids build-it-yourself monthly toy subscription. Brooklinen on their super plush robe, and then Base has their weekender travel bag as well. So we're seeing across a bunch of different verticals do really well. But a big thing actually that we're seeing now is last year seemed to be a lot of talk about getting outside. Gifts were about the products being sold were about things like skiing or hiking or camping. This year seems to be that home is really the winner here, where people are buying things for their home, whether it's kitchen stuff for the kitchen or puzzles or blankets. But generally, consumers are buying from brands they love, and we're fortunate those brands are on Shopify.
Shopify President Harley Finkelstein. And we'll be tracking EV stocks when trading begins in mainland China and Hong Kong. Sales data showing the Chinese car makers lost ground in Europe in October, slipping back from the record market share that they captured a month earlier. The spotlight on BYD. Sales fell for a third straight month as competition in the EV space intensifies. Let's get more with Bloomberg Transport reporter Danny Lee. Danny, what stood out to you in BYD's sales?
Well, BYD's sales fell for the third consecutive month, down 5.3% to 480 100,000 units. And it just shows the underlying weakness there is for one of China's largest automakers, certainly one of the driving forces in global EV sales as well. But interestingly, a lot of the sales were being driven by overseas, so there is still a weakness in the domestic market where there has been a crackdown on discounting and on price wars. As well. So there is that underlying weakness, but with sales now overseas rising to 131,000 for the month, a new record high by quite some margin, it is important as it continues to expand overseas for BYD that it continues to drive those sales up because it has been lagging over recent months. But clearly there is that underlying concern that for BYD with its kind of laggard kind of product mix, it is feeling the pressure from the likes of Geely and Leapmotor and even the likes of Xiaomi.
You talk about this weakness in BYD, but it's also the other Chinese car makers that look like they're losing ground. What's behind this?
Well, there is the pressure on regulation overall, and so therefore I think for the broader market there is a struggle, and the fact that there has been quite a run-up in sales, there is just that cooling down effect, and as we go to the year end, a lot of the automakers are kind of exhausted in many ways from having sold so much, and the pressure from the authorities to try and cool down that level of competition.
Danny, thanks so much. As we watch how things stack up, it's quite remarkable how BYD seems to have lost a bit of its edge that we've been seeing in recent times. Danny Lee, our transport reporter. That's it from the Asia trade. We'll, of course, be tracking some of these Chinese EV-related stocks. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.